In a move to fight rising inflation, the U.S. Federal Reserve raised interest rates by the biggest margin in more than 20 years. And everyone will feel that impact in some way.
TV5's Raven Blue is finding out what the interest rate hike means for you and your wallet.
For the second time in 2 months, the Federal Reserve has increased interest rates, this time by 0.5 percentage point, the largest increase in more than 20 years, all in an effort to fight against the worst inflation seen in 40 years.
Well, first of all, we knew this was coming, but it's still very disconcerting because we know it's going to hit consumers' wallets.
Jill Garvey from Huntington Bank says the rate hike will have an impact on consumers looking to buy a home or car. She says that over the past year, 30-year mortgage rates have gone from around 3% up to about 5%. But will it tame inflation?
So it will slow capital growth and it will slow spending. And it's basically supply and demand, the supply and demand principle. So it will bring the demand down so that supply can catch up.
The rate increase will also have an effect on credit card rates, so Garvey says consumers should consider paying them down. But while there are some drawbacks to the higher rate, there are some advantages, especially for people with investments in the stock market, money market accounts, and other diversified portfolios.
You need to pay attention to them because there are other alternatives for you to earn more on your money. It's very important to pay attention to what the Fed is doing because it affects both sides of consumers' balance sheets.
The Federal Reserve is expected to increase the interest rate several more times this year, but Garvey says there is hope for the economy on the horizon.
We expect inflation will start to taper off at the end of this year and settle down into hopefully the 3% range sometime next year. So we see the outlook as positive.
The Fed is expected to meet again in June and July to discuss additional increases. Raven Blue, WNEM TV5.
Homeowners who have an adjustable rate mortgage could see their rate go up. Auto loans, student loans, and interest on credit cards will also rise.